Thanks everyone for joining us today. And I do want to just introduce quickly Dan Fisk, who he is our claims supervisor for one of our insurance providers in the Northeast. So he works for Rain and Hail. He'll be covering our claims section. So thanks, Dan, for joining. Let's see, let me go back to the PowerPoint here. Just a quick disclaimer before we begin. The information that we will present is not exclusive to everything contained in crop insurance policies and provisions. So please be sure to seek out the crop insurance handbook and the crop provisions or an agent to help walk you through this. And Crop Growers is an equal opportunity provider. So before we move on to a little bit about Crop Growers, I wanted to throw this poll up. So let's see here. You should be seeing a poll. Just wanted to determine how many of you currently have crop insurance, don't have it, maybe it doesn't apply to you. So we'll give a few more seconds for that. All right. So it looks like it's about 50-50 for those it's applicable to. So let me close this out. All right, so a little bit about Crop Growers. First of all, we're really grateful for our partnership with the New York Wine Grape Foundation. Crop Growers is part of the Farm Credit East network, an umbrella of financial services exclusive to agriculture and ag-related industries in the Northeast. As you can see where those red dots are, that's where all of our offices are. So together, Farm Credit serves over 18,000 customers within our territory. As far as Crop Growers, we have a team of roughly 32 non-commissioned crop insurance agents, and our operations center is in Homer, New York. But where all those dots are, there's an agent that will cover the territory surrounding our offices. So to just do a brief overview, last year we did do a crop insurance overview webinar. So we will go through the basics of the policy just so we all have a good understanding of it, and then dive a little bit deeper into the claims process, take any questions that you have. So as Jen said, please drop them in as they come to you, and we'll try to address them live. So crop insurance is a federally subsidized program. We'll go over the coverage levels, and your portion of the premium will depend on the coverage level that you've selected. Your approved yields will be based on your history of production. So when you're establishing a new policy, you'll be working with your agent to get whatever and however many years of history that you have. So with a great policy, it's rolling 10-year average. Now, let's say you just purchased the vineyard 2 years ago and all you have are 2 years of records. Your agent will work with you on that to get a remainder of the county average, a percent of it, to backfill your history so that you can create your guaranteed yield. Prices are set by the government. So RMA is USDA's risk management agency. Those prices will be released annually in August. So what we call the established price, that will be the price that's received per ton in the event of a loss. So we do use local data. So the Finger Lakes Grape program has been really great with sending in the data that they receive from the region to help analyze the pricing trends, and if prices need to be adjusted, RMA does take that into consideration. So with the prices being set by the government, this isn't something that you can necessarily rate shop by agents. It's one set price, and that does mean that your price or your premium won't increase if you do have a loss. If it does go up, that means prices have changed or your average yield has improved. So you're paying for that greater coverage. So here's a chart of the coverage levels that you do have available. You can have as low as a catastrophic policy, which would get you 50% of your crop. So you'd have to have a 50% crop loss in order for a possible payment to be triggered. If it is triggered, however, you are only receiving 55% of that established price per ton. When you move up to what's called a buy-up coverage, that would be 50% all the way up to 85%. And you would receive 100% of that established price, depending on where you fall. If you lose, or if you have a 75% coverage level, that's where your trigger would be to receive a loss. And we'll get into a loss example. It's a lot of numbers to look at first. So we have an example in a few slides. So with those coverage levels in mind, you may be wondering, okay, that's great, but what is everyone else doing? Where's a good place to start? So I pulled what's called a summary of business report from RMA, and this is a report of all of the insureds in New York State. So not just insureds with crop growers. This is everyone who has a policy. And as you can see, I've bolded the 70 and 75% lines. So you can see a majority of growers are insuring their crop at 70 to 75%. So you can see the number of policies earning premium at each coverage level. You can see the number of policies that were indemnified at that coverage level. So that means that they had a crop loss that was paid. And then the number of acres at each coverage level and how much the indemnity was for all of those policies at that coverage level. And I think roughly there's almost 19,000 acres that are insured in New York State. So with crop insurance, how you have your policy set up is referred to as a unit structure. With grapes, you have two options. The first is called a basic unit. This is not ideal for grapes, especially if you have multiple varieties. A basic unit essentially means that all of your crop would be adjusted as one single unit if there was a claim. So if you have multiple varieties, you would have to sustain a 60% loss on average across all of your crop. So that's why with grapes, the best option is to have the optional units. This allows you to insure all of your varieties separately. You can also select a different coverage level by variety. So let's say your natives and hybrids tend to perform better. You might start out with a 60% coverage level, but your vinifera you may want at an 80% coverage level. So you can change those based on variety, which is really nice. And it's another way that you can customize your insurance policy. A few other options you have to break up your liability is to, if you have multiple farm serial numbers, say you have Riesling on your home farm and then Riesling on the farm that you lease, you can insure those separately, assuming they have two different farm serial numbers. Again, we talked about insuring them by variety. You can also insure them separately if you have irrigation or they're not irrigated. So moving on is, however you have your units broken up. So if you have optional units, you will need to keep your records however you have that set up. There's a lot more involved with the records and specific items that need to be on each of your records, which your agent would go through with you just so you make sure that everything that's needed per crop insurance is on those records. But typically all growers that I've worked with don't have any issues with the records. There is an important note that if your production that you've provided that you report annually, if it's determined that it has been over-reported by more than 5%, you run the risk of your units being collapsed into one and then having a yield applied. So it's really important that you're reporting your production accurately. As far as record retention, you have to keep your records and make them available for 3 years plus the current crop year. So in the event of a review, you need to be able to provide hard copy records to the insurance provider. Something that was new for last year, or the current crop year that we're in, is called a marketing certification form. So this would apply to anyone who is a UPIC operation, has a farm stand, and is a direct marketer. And for a lot in the Finger Lakes, we see vertically integrated producers. So they're producing the crop, they're making the wine, and then they're selling the wine all under the same entity. This is when you would need to just certify that your records are acceptable, even though they aren't from a third party. And with this certification form, you do also have the ability to request a pre-harvest appraisal that can be used in conjunction with your records. All right, so you've got, let's just say, a new vineyard, or you have some new blocks planted. When can those become insurable? So as of current standing, all varieties are insurable once they've met their 4th growing season after being set out. They also have to meet a 2 ton per acre production requirement. So they need to meet both age and production. There are a few other stipulations in New York State. Vinifera grapes are not insurable in all counties, such as Erie County. However, you can apply to have them insured. This would be a written unit agreement. So that is another thing that you would want to discuss with your agent of the particular varieties that are insurable in your county. In the Finger Lakes, there really are no restrictions on types of grapes that are insured. But again, in other areas where perhaps it's, not a prominent place for vinifera grapes to be grown, you may have to apply for them to be insured. Coverage begins November 20th annually. So this is when you would need to sign up for a policy buy. You can make your coverage changes to coverage levels, options. By the 20th, you can transfer your policy or cancel your policy by the 20th every year. Otherwise, the policy does roll until you cancel it. And your coverage elections will remain the same year to year, whether or not you have that conversation with your agent. Let's see. And the set out year, just to keep things simplified, anything that is set out before July 1st, that's considered their first set out year. If you're not sure how, for crop insurance purposes, that's the date that's determined. So here's a loss example. This is from our fact sheet that we use with growers. So in this example, we're going to go off of 5 acres of Riesling grapes. So let's just say your records support a 6 ton per acre average, and you chose 75%. That would mean your ton per acre guarantee is 4.5 tons. So moving that down to the second row, again, you'd have to have 4.5 or be below 4.5 tons to trigger a loss. So let's just say this year, for example, you had a 0.5 ton. That means you're 4 tons below your guarantee. And then the established price for Riesling is $1,535 per ton, which would mean per acre you'd receive $6,140. So at 5 acres, you would receive a payment of $30,700. So this is something that I go through with my growers or a new grower that is considering a policy. You can run through this example if, as you're going through the growing season, what would it be if I had crop insurance, or if I do, what is my projected payment going to be? So this is a really helpful tool. So with that, I will hand it over to Dan. He'll cover, what's insured on the policy and then the claims process.
Okay. Thank you, Deanna. You can hear me okay?
Yep.
Okay. All right. And thank you for having me. I am Dan Fisk. I am with Rain and Hail Crop Insurance. There are a lot of different insurance companies. I think there's about 12 or 14 nationally, maybe not quite so many in the Northeast. I happen to work for one. I've been doing this for about 12 years. Used to be a dairy farmer, also worked on an apple orchard, and found crop insurance. So just one thing before I get into this, if you are new to crop insurance, I was just going to clarify, we do talk in terms of guarantees. We guarantee so much of your crop. So we cover, it's different. We don't talk in terms of deductibles. So if that's a new concept to you, yeah, we basically will look that, anything, if you have a 65%, we guarantee payment for any loss after that 65%. So a little bit different than how you may be used to like an auto policy where you have a deductible if you get in an accident. So the covered perils are basically anything out of your control. You can see the examples here on the slide. We would even cover an earthquake comes through and the tremors shake half your grapes off. That would be a covered loss. Doesn't happen much here in the Northeast, but anything really that's out of your control is covered. Wildlife come in and do, damage, eat a bunch of stuff, nip a bunch of the buds early on. That's covered. What we don't cover are things like you have a neighbor that is a dairy farmer and their herd runs through and tears out a bunch of your trellises and does harm that way. We would not cover that. That's more of a property and casualty. You would have to square that with your neighbor. So anything out of your control generally would be covered. And we all experience that freeze. We know it's had a very, very serious effect on grapes and a lot of other perennial crops, apples, peaches. So we're looking at some definite losses this year. And the other thing, when you have an insurance policy, your part of what your responsibility is that you call your agent within 72 hours so that a claim can be submitted. That's, you went out, you saw it was a freeze, there's damage, you call them, they put in a claim, and that's when we will start working it. So until it's in the system, nothing really happens. So the first sign of anything, now we've got some drought that we're worried about. So as soon as you start seeing the drought having an effect on your crops, then feel free to, give a call to your agent and get that claim put in. So if you want me, I can address, there was a question put in. Do you want me to catch that one quick? So, yeah, the question was, is the payment based on personal wealth of the owners of the vineyard? It doesn't matter. We do not look at personal finances. We only look at your crop and damage to the crop you have insured. You could be a billionaire or on welfare, whatever you are, has no bearing on how we treat you or what payments will be. You're insuring your crop for that crop year, and that's the only thing that we care about. Yeah, Deanna, if you want to hit the next slide. So kind of how the claims process goes. You see the damage, you notify your agent, and the agent will submit that claim to us. We will then contact your insurer, and the adjuster will be assigned for us. We will contact your insured within about 24 hours of that claim being submitted. So if you have the crop, you put the claim in. As soon as that hits our system, we will call you. And really in the beginning, we're just going to ask you, what's going on. If it's widespread like that freeze was, we probably already know. But otherwise, if it was something where you have more deer than everybody else in the area, we might have to ask, what are you seeing? But usually your agent will put a note in the system and they'll let us know what happened. And we'll call you up. We'll probably ask you a couple questions. How bad is it? Is it just that you're concerned and there may not be any damage, which is totally fine. Or you may say, yeah, this was bad. We got frozen and we're looking at about a half a crop. Then we'll monitor it. throughout the growing season, but we won't finalize the claim until after harvest. So we'll wait till you're all done, and then we'll come out, we'll do all the paperwork, and we'll get you a check as soon as possible. The other thing Deanna mentioned too, that a little bit different. So if you have a vineyard and you also have a winery that is considered vertically integrated, you're processing your own grapes. For us, we come out and we appraise your crop. That way it is third-party verified. We do that pretty much in all instances. That way it's just a layer of protection for you as the grower. You know, somebody has been out, they've seen your crop, and now we have records from, we're considered disinterested. We don't really have an interest in your crop. You know, we just look at what is there, so that way we can protect you. And we've even had it where we've had claims put in really good years, thinking of appraisals, and we've called the farmer and we're like, everybody's having a bumper crop. Why did you put in a claim? And they said, nobody's going to believe how good my crop is. I want you to verify it. So once in a while we'll do that. Like, you just, it's outstanding, and you're not sure that you could support it. You know, maybe you don't have the records, or like I said, you're processing all the grapes yourself. So we'll verify the crop for you and make sure that we're covering everything. So very simple process. Like I said, it generally we'll visit you through the growing season, but really we have to wait until everything is harvested. We have to see how much crop you have, how bad it was. You know, quality can factor into it. You know, bricks and sugar content, all that good stuff. So it's not complicated, it's not scary, but given the weather, we've certainly had a lot of instances where crop insurance has been very beneficial, just because of freezes and weird things going on. So, and I will be here throughout this time. I'll answer questions. Deanna, if I missed anything, let me know. But I think that was all I was going to cover for today.
Yes, thank you. And we did have another question in the chat. So the question was, for someone growing grapes to make into wine, the loss is also the potential loss of no wine to sell. Is the assumption that the claim payment should enable buying replacement grapes? So yes, that typically would be, you know, we don't dictate what you do with your payment, but that's the assumption that you would use that payment to purchase grapes. I know last year, with just how devastating the losses were, we were able to work with an insured. He asked that, you know, as units were closed out, as the records were received, if those claim payments could be processed. So we did have a series of, you know, 3 partial payments throughout the claims process, so that they could get that money to purchase the grapes that they needed. So hopefully that answered your question. And let's see.
Sorry, Deanna, that's a good point. If the one big advantage, or one of the advantages of multiple units, is we can process the early grapes if they're harvested, get you some money early on before the rest is harvested. So if you do need to replace anything, you do have some income coming in.
Yes, definitely. So we're getting some questions specific to cost. I could probably pull up the quoting tool. It will also depend on, you know, what your average is. So we could run through a quote based on the county yields. We can do that. And then another question on how is pricing set for unique varieties and characteristics, such as a new variety, biodynamic, or organic production. So it may actually be helpful to go through a quote. I think let me just see where we're at. I could pull that up. I don't see why not. Let me log in. Rain and Hail, the company Dan works for, has a really excellent quoting tool. So let me log in. There is a price list that comes out with, again, those prices by variety per ton. But I think the quoting tool should help us cover that. So let me just pull this up before I share it. And this will be based on the current crop year that we're in. So prices may change by October when you're looking at these prices. So I'm going to use Seneca County as an example. And let me pull this over here. Dan, if you want to just confirm that you can see the quoter.
Yep, you're good.
Okay. So on all of my policies, I use a yield adjustment and a yield cup option. The cost is really negligible for the benefits that it provides. So yield adjustment would say that if your actual yield fell below 60% of the county average, it will be replaced in the system with that 60% number, just so that there's not a lot of drops in your average. And that'll protect and preserve a higher guarantee. All right, so if we are going to do the Riesling example, over here, at 5 acres. Again, we're using the county averages. You do have the option, you could enter in your history with your agent, but we'll just use the county for this example. We will illustrate this. So how we would read this quote, and this is why I really like Rain and Hail for this purpose. So this shows you the coverage level you selected, your options, the price per ton. So that's your established price. So using the county average, the yield is 4.7 tons to the acre. So 75% of that would be 3.5 tons is your trigger yield or your per acre guarantee. So that means that your coverage per acre would be about $5,400. The per acre premium would be $195 roughly. So this column here is the total premium, including or less the subsidy is this column. Let me say that right. So this column here, the producer premium, is what the producer will pay with that subsidy taken out of the total premium column. So really just look at this column here. So that would be the cost, assuming your yields fell in line with the county average. If you're establishing a new policy, you would need to prove that it's met at least 2 tons in one of the last 3 crop years. So hopefully that answers that first question. Let me pull up a pricing sheet, and that will show these here where the prices fell this year. It's just a chart with everything on it. We had a question on what the pricing was for, I believe it was some reds. So let me pull this over. This is just a summary of everything. So let's see. Hopefully that answers the question for the appraisal value for like Merlot, Cab Franc. So Merlot, the 2023 price per ton was $1,855. So you can see all your vinifera varieties will be here. And then as far as your unique variety, so if it's a new variety that there's not a lot of data for yet, it will typically fall in the all other category. So we have all other vinifera, There will be an all other native category, and then an all other hybrid category. As there becomes more data, we can seek out with RMA to get those broken out. So like last year, we had Separavi and Zweigelt broken out of the all other category. So again, the Finger Lakes grape program was really, their data was really helpful to get that broken out. We're also working on that for another variety that I got some feedback from my growers that, hey, this variety isn't really insured at the price that reflects like its actual market value. So if you're seeing that, that's something that we can take to RMA, and they are very receptive and responsive to getting those changes made. Sometimes it does take a few years for the data to kind of match to what the current market is. So we had another question. Is there any way to have the price payout on a per ton basis adjusted for this current crop year? Pricing is changing immensely for the current crop year, but we feel the established price will not reflect the pricing for 2023. So again, that's one of those things where, this is the price that was established by RMA. Unfortunately, there are a few varieties that, it doesn't match. There is always going to be a bit of a lag. They say it's typically about a 3-year lag or so behind current market value. That is the kind of unfortunate thing about the crop insurance policy, is that it doesn't always accurately reflect what you're seeing locally, but it does its best to recoup some of those costs that were lost by not having the crop. So I hope that answered your question. If not, please let us know. Okay, so if that answers all the questions as far as quoting and the prices, and again, if this is something that you're interested in looking at in greater detail, I'm more than happy to meet with you, sit down with you, go through a quote for your entire vineyard. A lot of the growers I talk to, they are very surprised with the affordability of it. Compared to, let's say, apples, it's a very expensive crop to insure. So as far as next steps, for you, if this is something that you're interested in learning more on how, what the price would be for you, is this something that would make sense for your operation? Definitely, like I said, with our partnership with the Wine and Grape Foundation, we're happy to meet with you. There's never any obligation to sign up for a policy. You can also seek out another agent if you'd rather on RMA's website. What I would do, or a crop growers agent in your area would do with you, is, again, go through a quote, go through your input costs, help you understand the policy, what your liabilities would be, what your coverage or guarantees are for the crop policy. Does it make sense for you to have, what coverage levels? Like I said, modifying different coverage levels by variety, depending on what your history is. And then going through any other options that are available. There is an area plan that we didn't even touch today that would provide, more of an area coverage on top of your individual plan. So we can get into that. And again, now's a good time to be thinking about this. It's fresh on your minds. Gives you time to think about it throughout the growing season, so that by the time November comes around, you're ready to make your decision. So that's what we've got. If there are any further questions, please drop them in. I've put our crop growers by region. If you don't see your region on there, just send an email or call our operations team. Just check in the chat again.
Yeah, you had one in there.
Let's see. Is it true you were able to break out a variety of grapes and get its own pricing? So yes, again, we did that with Separavi and Zweigelt. That was based on a grower's request, essentially, and we brought that to RMA. Another one that we got a lot of feedback on was Gruner. So that was one I've worked with RMA on. I think they're still working on the pricing data. So we'll know by August if that one was broken out. So as new varieties are being established, it also depends on the acreage that is within the state. What's the pricing data? We need data. Big first thing with crop insurance, RMA needs the data. So if it is something that growers are advocating for, that's definitely something that we will also help pursue and use our local resources to help inform RMA about what is in our area. And let's see, another question. Are pre-acceptance worksheets required each year and updated annually by the producers? Yes, so there is acreage and production reporting that's done annually, which is due by January 15th. So the pre-acceptance worksheet essentially will go through, it's basically your vineyard on a piece of paper. We will write out each of your blocks with your varieties, plant dates, how many vines are in that block, what's the spacing. So if anything is removed or planted, that gets documented on the policy and updated every year. If you do have changes, sometimes old varieties were missed or, a block was missing, so that gets added in. Everything, if you do have an insured crop in the county, 100% of that crop does have to be insured. If you have a vineyard in, 2 counties, but you only want to insure 1 county, that's fine as long as everything is insured. But you can insure both counties. You insure them separately at different coverage levels. Hopefully that answered that. I think we're good. So yeah, if you have questions that come up even after, again, our contact information is there, or you can send them through Jen and she can forward them on if you're comfortable with that. But we appreciate everyone joining us today and for the interaction. We're here to support you. We want to have those conversations. They've been difficult, but we want to be sure that we're helping growers when we can, and letting you know that this program is available and determine if it's a good fit for you.
Thanks so much, Deanna. Just so that everyone knows, we are recording this session and we'll send it out to folks after the fact. So you'll get all the contact information and such in that email. And as always, if you have any questions at all, feel free to give me a ring or shoot me an email. Thanks again for being with us today, Dan and Deanna. I hope you all have a great day.